Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's the third straight day of weakness for the markets. The Nifty slips below the 10,150 mark. The government decides to advance the rollout of the BS6 vehicle. In fact, the norm will be applicable to April 2018. Sun Pharma is the top Nifty loser after the management says that it cannot give a clear timeline for resolving the Halol facility. Oil prices correct sharply after the International Energy Agency cuts its demand outlook for 2017 as well as 2018. And Tata Steel, Piramal Group and Edelweiss ARC are likely to submit final resolution plans for electro steel steels. That's a Bloomberg Quint exclusive.
Well, thanks a lot for that, Navneet. Just bring up how the market has done, and not too different from what it was at about 1 p.m. So it's about 0.5% or thereabouts for the Nifty and the Sensex, or 1/3% really for the Sensex. So no dramatic changes there. The market breadth will come up on your screen. I don't think it's a terribly impressive picture. The market breadth, in fact, has worsened as time has gone by in today's session, and which brings me to what the mid-caps and the small-cap indices have done. Those should come up on your screen. Yesterday, they were outperforming the large caps. In today's session, I think the small cap space in particular has cracked another 0.5%. Keep an eye out on the broader end of the spectrum. Mind you, it's unraveling at a fairly fast clip. But while Pradeep will talk about that, just want to bring up what the Nifty 50 is looking like. The heat map should come up on your screen. And a fair bit of red. You wouldn't have not anticipated this. Just a lot of red out there, and dominated by 2 or 3 pockets. One is commodities, so the Vedantas, Hindalcos, Tata Steels of the world have corrected. There is pressure in pharma today, led by Sun Pharma, yes, but some of the others have participated too. And heavyweights which have cracked include ONGC as well as ITC. Towards the end of day's trade, you'll probably find the two of them featuring on the list of the top contributors. And as I said, the problem is not enough gainers, but for OMCs which have participated today, there aren't enough gainers, and that is leading to further pressure on the index as well. But the broader markets too, Pradeep, unraveling in a hurry. You would have gainers, but the market breadth fairly adverse.
Yeah, so there are quite a few losers here, and to begin with, actually the commodity or commodity-related stocks really to watch out for. JSPL quoting at day's low has corrected 5.5% by now. You also have some names like Graphite and HEG, because they kind of move along with steel, and when steel and other metal stocks correct, both these stocks are kind of locked at lower circuit since morning. I think Graphite, the lower circuit had opened for a while, but most of the time HEG and Graphite were seen at the lower circuit level today. That kind of gives you an idea of how intense the selling pressure really is. Phillips Carbon, again a commodity-linked stock, I would say is down 7.5% with good volume. So these are a few stocks that I've picked up where volume is significantly higher, and the stocks have corrected quite a bit. On the positive side, we have ones like Balakrishna Industries. Tire stocks are doing well today as rubber prices have corrected. And also you have Fortis Healthcare. There is a news report of an acquisition. Stock is quoting close to day's high. And Shreyas Shipping is another small cap stock which is doing well after the good set of numbers that the company posted yesterday. Profit has gone up 7 times, and you can see the impact. So there are a few gainers, but mostly losers in broader market today, Navneet.
It's been the third straight session that we've seen correction coming into the markets. Let's also check what's happening on the futures and options side. Clearly, the cues have not been great because the selling pressure still is there, both on the cash as well as some bit of unwinding was seen on the futures and options side yesterday. Watch out for the Nifty premium. Remember, the premium in the last few sessions has been on the higher side. It's somewhere between 40 to 45, and it's not usual at all at the mid. We are just at on the 15th. Today's the 15th for this series, and almost 2 more weeks to go for this series to expire. So usually premium hovers around 20 to 25, though it has come off highs of 45 to 50, currently at about 34. And historically, if you go by the premium data, Nifty finds it a bit difficult to move sharply on the upside if the premium is on the higher side. So we'll have to wait for the premium contraction to come by. But overall, if you look at the volatility index, we did see some bit of cool off coming in the morning session. Again, volatility volatility went up in the intraday session, but currently there are cuts of almost close to 5%. It is below that crucial mark of 14, but remember, for any sort of sharp up move, it has to slip below the mark of 12.5. What's happening on the option side? That clearly call writers have taken charge of this market. Aggressive call writing for out of the money strikes has been seen. Today, the 10,200 call strike has seen a lot of open interest addition coming by. Last when I checked, almost 15 to 16, almost 17 lakh shares actually have been added so far. And if you go by the premium on the 10,000 call as well as put, the range that one is getting for Nifty in the near term is 10,100 on the downside to about 10,285 on the upside. The first level now to be watched on the downside will be the 50-day moving average, which is somewhere around the same levels of 10,115. Bank Nifty, now what's happening there? It's been little stronger than Nifty in the past few sessions. It's been trading in the tight range of almost 250 points. Watch out for the first support, which it has protected throughout the day, 25,200. That's a very crucial level for Bank Nifty. Just two stocks I want to highlight from the stock futures front. Jet Airways is the counter, which has been pretty strong today. Once again, it has seen some fresh long positions coming by, but it's also touched its fresh 52-week high. The volumes on the cash side have been higher, but I was just checking yesterday's delivery data was not so strong. I don't know if there is some sort of speculative trading happening here. Balkrishna Industries, I highlighted this counter yesterday as well. It's trading at all-time high. Today, obviously, all the tire stocks are up because of crash in rubber prices, but this is the counter which has been seeing significant amount of buying on both cash as well as the future side.
Okay, so that's the update really, and let's look at what's happening in the broader market. There is quite a bit of correction and profit booking that continues. If you look at the mid cap and small cap space, the indices are close to day's low, so kind of new lows for Nifty as well as for mid cap and small cap index. Even the Nifty Bank, I would suppose, which was doing a tad better than the Sensex and Nifty actually so far, that has also come under some pressure. And well, this is one index which is still hasn't really broken the last hour's low, so to say. It's not at the day's low really, so there is some strength here, and we'll talk about it. I think Mahantesh is joining us now, head of retail research at SBI Cap Securities. Mahantesh, how are you really looking at this broad-based correction in markets?
Good afternoon. So the correction that we are seeing in the markets has obviously got to do with the earnings season conclusion that we have seen. The earnings season has not been so great so far, and therefore there is this correction that is happening. The second reason I would point out to is that the recent uptick in the bond yields have now crossed to 7%, is worrying the market. So I think this is what is broadly dictating the fall in the market for the past few odd days.
Mandesh, good afternoon. Neeraj here. What did you make of this immediate piece of news? We might get a couple of managements to talk about this as well, but the government advancing the BS6 fuel norms by 2 years in Delhi. I mean, we all know the reason why this would have been done. The question mark is the impact that it could have on select auto companies. And quite frankly, while this has happened in Delhi by 2 years, there is no saying why this will not be reenacted at a lot of other pockets in the country.
So that's a fair point. Actually, what we have seen, this is not the first time that the government has advanced the BS6 norms or these emission control norms. We had seen that the government in the past has advanced by 1 year for the country as a whole, the BS6 norms itself. But the moot point here is that technically speaking, and I may not be the perfect technical guy to tell you this, but between BS5 to BS6, the transition doesn't really involve great technological change as far as the automobiles is concerned, and therefore that's a manageable cost for most of the automobile companies, and therefore I see no problem of that on automobile stocks per se. And even if it gets extended, let's say, to the entire country, that means that the advanced date is made applicable not just in Delhi but for the entire country. I see that that's not a technological challenge. There is not much of a cost jump or a cost barrier for most of the automobile companies, and of course they also have this pricing power. They can pass on the cost increase wherever there is to the end consumers. So all in all, I see no effect on the automobile companies.
Antesh, you have tracked this sector very closely. Actually, if it is implemented, across country, maybe that would be easier. If it is implemented only in a pocket, would that be a challenge for companies to manufacture, a different kind of vehicle just for a small area in Delhi?
Yeah, it becomes a challenge from production point of view, because you need to have your entire production systems geared up accordingly. You need to have fairly accurate forecast about the quantities that you will need to sell in the small pockets where the dates have been advanced, and that becomes a little tricky. But then there is a way to circumvent all this from the production point of view, which is that you make all cars Euro 6, for example. That means you stop selling Euro 5 vehicles. That's a strategic decision one company can take to overcome such production challenges. But having said that, these are small tactical strategies that each automobile company can undertake, and it's quite possible for them to sort of roll out these strategies.
Mantesh, just staying with the same space, the tire stocks have been on a tear in today's session. The reason probably for today's moves have been largely on account of the crash that one has seen for the rubber prices in China. What's your view on this space? Do you find valuations for a couple of these tire companies expensive, or they still look attractive?
So per se, the tire sector is something that we really like, and we have been observing this ongoing process that is happening in the country. One is on the truck radialization. That means more and more trucks are adopting radial technology and radial tires. So that's a progress that is getting slowly accelerated. That's number one. Number two, we are seeing that the dumping of Chinese products or Chinese tires into India is getting curtailed, thanks to two things that are happening. On one hand, the automobile tire manufacturing companies themselves are producing so-called warranty less tires, low-cost tires, to combat Chinese tires. Plus, you have anti-dumping duties coming in. So the space is good. The recent spate of news that is coming for the tire sector is like one that you mentioned, softening rubber prices, but at the same time crude prices are also rising. That's a worry. The recent tire company results that we have seen, particularly of CEAT and JK Tyre, have shown that there is resilience in the margins now. They had a very bad Q1, if you recall, and now they have strongly come back with good margins, and that's partly due to GST as well. And of course, the third one, which I just referred to, GST, is incrementally positive for tire companies.
Okay. A lot of high-flying stocks are unraveling a bit. Stocks which have gained quite a bit in the recent past, the likes of Avanti Feeds, for example, are coming off. We've seen the commodity basket looking under a bit of pressure any which ways today. Hindustan Copper, from amongst the broader end of the spectrum, coupled with Nalco, has also come off. And a stock which was doing very well until the morning, Gujarat Alkalis, is now down about 5.5% in the session as well. In this scenario, Mahantesh, would it be advisable for somebody to keep some gunpowder dry for lower levels? Or are you finding select pockets which are worth putting in money at the current levels?
Okay, so our advice had always been that that you have to be very, very stock specific. When you have the broader index going so high, with Sensex at around 33,000 levels and Nifty about 10,000, the valuations have crossed the comfort zone. The comfort zone for valuations is typically 15 to 17 multiples. Now you are 19 multiples, and with the weakening in earnings that we have been recently seeing, probably some would say that the forward earnings basis, the Nifty is appearing almost 20 times in terms of valuation. So therefore, when you have high valuations for broader indices, you have to be very, very stock selective, and therefore there's no need to keep the so-called cash levels with you and like you mentioned, gunpowder dry. You have to find those pockets of good stocks, strong managements, good prospects, low valuations. So you will have companies that are available which are cheaper in terms of valuations, who have a stronger growth ahead, and who have a chance of getting re-rated. That means the P multiple themselves will expand for such companies. So our advice generally is to remain invested in the markets and remain invested with good quality stocks.
Okay. Well, what is the kind of advice, Mahantesh, that you have shared with your clients on commodity stocks? Are you advising them to take some profit off the table, both on base metal and steel?
If you recall, for quite some time we have been negative on the commodity stocks, but I must admit that with the strong rally most of these names have posted on the metal side, we have been caught on the wrong side. But look at it this way: the last year also we had steel stocks rallying. We have the steel stocks rallying even this year. So this rally has become a multi-year rally. So if most of the investors, I'm sure, would have caught some portion of that rally, even if they have missed the last legs of the rally that we are seeing right now, there's no harm. But looking forward, we think commodity stocks is a risk. Commodity stocks, especially on the metal side, commodity stocks, especially on the mineral side, we have even seen certain mineral kind of stocks going up. And some of the commodity stocks who are linked to commodity stocks, like you talked just about Gujarat Alkali, soda ash producers, for example. These are ones which I think are towards the fag end of their rally. It's always better to take your profit and get into some other sector.
Great. Mahantesh, good having you. Thanks much for taking the time out and being with us today. That's Mahantesh Sabarad with his thoughts on the markets and specific pockets. By the way, just before we move on to the stock of the day, I think we need to show the ADAG group stocks. The Nifty too, I'm surprised Navneet has not beaten me to it, but the Nifty is corrected and now close to that 10,121 level. Remember, at least three chartists, I don't know Pradeep has a thought out here or no, but at least three chartists in the morning have said that 10,120 to 10,180 is a key band. Now we are nudging the lowest end of that band. Pradeep, I don't know if this breaks, then there are some further downside levels.
Definitely. Significant downside actually. Between 10,100 and 10,140 was my band that I've been looking at. So if we close below these levels, it would really be a shock because we have corrected quite a bit. If you look at it, roughly 1,000 point on Sensex, we have already corrected. And still, even at this level, we have kind of outperformed the other global markets, on the downside. So there is no reason to fall further. There is no trigger that we can see, but definitely in terms of technicals, closing below 10,100 will be a shock and will open up.
I have something to add here. 10,115 is the 50 DMA that we are watching. But besides that, last time when the major correction happened, that was in the month of August or September. I think it was, or between that. There was a lot of supply around those levels. That time the top was 10,100 and 10,150. And after that supply came into the market, Nifty slipped to levels of almost about 97 to 97.50 thereabouts. Yeah. And that's where he's saying this was a major support because last time there was a lot of supply which came in, and that's exactly happening this time around as well, where everybody was expecting there could be a bit of buying which could come in at lower levels, but that's not happening.
Yeah, but just to get the record straight, we're not trying to spread panic out here. There's no saying will there be a bounce tomorrow or no. This year drawdowns have been very, very shallow. This drawdown that Navneet was speaking about as well was all of 3.5% before the buying that emerged. So let's wait and watch. No alarm bells, but these are levels that people and traders should be mindful of. At least that's what traders have told us since the morning, and probably Pradeep looking at it as well. In fact, Pradeep is going to look at some interesting charts on the Bank Nifty too. But just before we do that, since we are talking of the corrections, look at the ADAG group names. Reliance Capital has cracked further. You can understand Reliance Communication and a few of the other stocks correcting. But Reliance Capital is down 10%, and now this is off from levels of 590 or 580 odd. That is actually the problem. So I don't know if Reliance Industries and some of the other names too have come off. This is Reliance Capital, sharp crack. Reliance Naval, Reliance Communications, all of these stocks are coming off. I just want to mark what Reliance Industries as well is doing. Chalk and cheese, remember these names. So it's not so much for Reliance Industries, but the ADAG group stocks certainly correcting in a big and a thick and fast way in the session today. So not a happy hunting ground for this one. Look at that. Oh my goodness. Reliance Capital was down 10% just a second ago. It's now down 13%. Reliance Infra is down 10%. Reliance Communication will become a single-digit stock in a matter of a few minutes, the way the correction is going. These are ominous
check
times.
The recent listing of Reliance Nippon, what's that doing?
Well, yeah, RNAM, Reliance Nippon Asset Management should also come up.
6.5%.
Wow, there is pressure, all right, on all of these ADAG group stock names. It's turning out to be a rather tepid afternoon for these names in particular. ADAG under
well, our comp is 990 now, so single digit. That you thought will happen in a few minutes has happened.
Yeah, nothing to laugh at, but these are just very, very strong corrective moves that are happening. And you know, you can understand with Reliance Communication, yes, but Reliance Infra and Reliance Capital are no punter stocks. I mean, they are, and I'm not alleging Reliance Communication is, but Reliance Infra, Reliance Capital are institutionally held stocks as well. But they have been in a strong corrective phase, particularly Reliance Capital. But Reliance Infra is seeing quite a bit of a fall in the session today. Just before we get to the wonderful chart that Pradeep wants to speak about, let's just bring up the 1 month returns of both Reliance Capital and Reliance Infrastructure. You will see the kind of pain that shareholders of Reliance Capital have had to face. This is the 1 month return for Reliance Capital, 22%. And that's fallen quite strongly. Reliance Infra is the other one that should come up on your screen. 22% over 15 days, by the way, mind you. This one hasn't fallen as much. But in today's session, there's a sharp correction that has happened. And I think I repeat for the benefit of viewers tuning in right now, RCOM is now a single-digit stock. It has slipped sub the 10 mark, 10 rupees mark, and now trading in single digits is Reliance Communications. However, let's try and bring up, this is Reliance Communication, 9.95. However, let's try and bring up the charts on Nifty Bank and try and see if there are some patterns that we can draw. Pradeep, the Nifty is corrected even further as we speak. It's the Bank Nifty which is not falling or not cracking as badly as the Nifty is.
Yeah, and there's a reason behind that. And it's interesting that when Nifty is also kind of quoting around important support levels or range, so to say, the kind of unwinding we have seen in so many cash counters, it kind of indicates a panic selling and a final capitulation, so to say, as we say in the market. Nifty Bank is also negotiating a crucial level, and that is the point I'm trying to make. If you look at this chart, in last 1 year, Nifty Bank has moved from around 17,000 levels to the recent highs of almost 26,000. And if we look at what happened over last 3 months, and we have seen this chart earlier when we were actually pointing at the breakout that had happened, and we went up after that breakout, but now we have corrected. So if you focus on just this shaded area, which kind of includes last 3 months, so August, September, October and November so far. After consolidating for 3 months, we saw a breakout, and after that we have corrected again. And now, while correcting, we have come back to the earlier consolidation zone. So in technical analysis, as we say, a resistance once breached, it becomes the support. So here, a resistance which took 3 months for Nifty really to breach around 25,200 odd levels is where we are. We have come back, and now that becomes a support. So it's interesting to note that not only Nifty Bank, that's the reason why it's not falling as much, because it's at a very crucial support level. But when several indices are quoting at important levels, there is a probability that this could be an inflection point, and market may kind of turn.
What if the index breaks that crucial support?
So then on Nifty Bank, we will look for the lower end of this move maybe. There are some intermediate supports, but then we can fall all the way to 24,000. That's always possible. Similarly on Nifty, if we break 10,100 and close below that level, it's always possible that we may fall in the 300 to 400 points.
Well, let's wait and watch what happens to these. But clearly, it's an afternoon of a lot of stocks falling off. Now we are at the lowest point of the day. So there's just no point in talking about what's really happening to specific stocks like Fortis and a few others which have done well. But yeah, let's just get in a management conversation going. We'll just do that. We'll be joined by the management of Action Construction Equipment in just a bit, but need to mark a few other stocks which are falling apart in the session. It's not just restricted to this Reliance Dhirubhai Ambani Group stocks. GMR Infra is now down 9%. JP Associates 8.5%. Avanti Feeds is a strong 7% down. Indiabulls Real Estate, by the way, is down about 7% as well. So that is cracking. JSPL is down about 6.5%, but you could understand that could also be because of some commodity-related pressures. Adani Power is down 5.5% as well. So a lot of these trader-friendly stocks are dominating the list of losers on the BSE 500.
Also in the derivative side, so probably that's one of the other reasons why you're seeing that sharp fall, especially in stocks like Adani Power, GMR Infra, JP Associates down nearly 9%. In fact, your top four losers, if you look at the F&O securities, are all these Reliance Group stock, Communication Capital, Reliance Naval and Reliance Infra. So looks like some bit of short positions are also being taken here.
Yeah,
there could be probably, two possibilities. A, that important stop loss levels got triggered. B, there could be some margin calls that might have been triggered because of the kind of fall we have seen in all these high beta stocks, typically where you will expect a lot of leverage positions also.
It's certainly looking ominous for that set of stocks for sure. 10,115, we're knocking on the doors of 10,100. Let's see if that gets taken out in the afternoon session or not. Just bring up the global markets once for the benefit of our viewers who are tuning in right now, and just see if indeed there could be some support that could come in from the global markets, because the Dow futures were trading in the red the first time I saw them this afternoon. And no, it doesn't look like that there is. No, this is actually the close yesterday. But the Dow futures were suggesting a start which was slightly in the red. The European markets could come up on your screen. These are yesterday's levels. Let's bring up Europe and just see what the European markets are doing in the session today. They did start off on the negative note, and yeah, for now certainly seems to be no support coming in from the global end of the spectrum either. So no, not a great day.
We've breached the 50-day moving average on Nifty as well, which was around 10,115 thereabouts. So that too has been breached. So let's see if there is any sort of buying which comes at these lower levels, or there is a fresh round of selling which comes about. But sectorally as well, sectors like metals which have performed well. So there is profit booking which is being seen for Nifty. Metals is down almost 3%. You've seen cuts coming in for Nifty Pharma down over 2%, and Realty and FMCG index are also seeing cuts of about between 1 to 2%. Well, a good time to get in our guest then, Mr. G. Chokalingam, founder and managing director at Economics Research and Advisory, joins us now. Good afternoon, Mr. Chokalingam. Clearly not a great day for the markets. In fact, it's not turning out to be a great week as well. What should one do at these levels?
Those who are trapped in such infra companies cannot do anything. Even now, it is not too late to sell some of the infra companies where the balance sheet concern is there. But otherwise, if somebody is into stock where valuation comfort is there, management quality is there is no need to worry, because I still believe in a long-term bull run in the market.
Okay, you talked about infra. ADAG Group as such is not a sector, but a set of companies across sectors. But if you're really tracking it closely, do you think there is any of these stocks that one should keep an eye on and try and buy at lower levels?
Certainly, one name is Reliance Nippon Asset Management Company. Now, after the correction, it is decently valued, and you have one of the globally reputed partner, and this business in India keeps growing. So it's a solid growth stock. So that is one stock one can consider. And even Reliance Infra, the way it has been beaten down, I think it is overdone. Even that stock one can look at.
It's interesting. Now, Reliance Nippon Asset Management, which of course got subscribed 81 times, is available at a price lower than the IPO price, 247 to 252. So 252 was the issue price for Reliance Nippon AMC.
It listed a knee-jerk reaction in the entire group, because what I remember from majority of the brokerages, they were pretty gung-ho on a company like this, first asset management company to get listed. And the prospects, I don't know what are the headwinds going ahead for this industry, but Reliance Nippon AMC was one stock where majority of the analysts that we've spoken to have been pretty bullish.
Yeah, I don't think this has got to do anything with the individual counter.
Exactly. It's just a knee-jerk reaction for the group companies, because I remember when the Reliance Communication numbers had come out, the interest payment amount was actually more than what the revenues were clocked, and they also mentioned that they've missed out, paying out the interest for 2 of their debentures as well. So we don't know, maybe something else is coming about with regard to Reliance Communication, but clearly it's a knee-jerk reaction that one is seeing for even companies which are doing well for this group, and this has to be Reliance Capital and Reliance Nippon.
Yeah, Reliance Nippon Asset Management certainly not in any kind of undue stress, but yeah, well, who's to argue against a price when it is falling? By the way, 10,108, and now the Nifty is knocking on the doors of 10,100. Let's get in Kunal Saragi, Chief Executive Officer and Editor at Equity Rush, joins us right now on the show. Do we have Kunal? Okay, I think we'll have Kunal Saragi in just... Oh, we do have Kunal Saragi. Kunal, thanks so much for joining in. Any trades that anybody can initiate at these levels, Kunal, on the Nifty or the Bank Nifty, which is actually not cracked and trading at probably crucial supports?
Well, I think it's safer to trade Bank Nifty as opposed to Nifty, Neeraj. I think Bank Nifty, as you rightly pointed out, has been outperforming the Nifty. So if one were to initiate a long trade, I think it's got to be in the Bank Nifty. It's got a last bastion support at around 25,200. In the spot market, and I think that will be the support for Bank Nifty. 25,200 can be your stop loss. I'm looking for a target of 25,500 if the selling were to cease at this point and the trend were to resume.
Kunal, are you advising some fresh shorts in any segments, any stocks?
To go stocks, but one stock that one could short, I think one space that one could short is metals. We've seen a very substantial breakdown in almost all metal stocks. Hindalco is breaking down as we speak. It is breaking below 255, which is a major support area. I expect for the stock to go down to 240. So some Tata Steel has been going down. So I think metals are one area of weakness and can be sold in.
Kunal, what's the next level on the downside that you'll be watching out for Nifty now that it's trading below its 50-day moving average of 10,115? If one has to watch on the downside, what level would it be now?
See, the first level to watch out is, or the first thing to watch out for is whether or not we get a close below 10,150, which I think is very, very important. If we get a close below 10,150, then I think the selling will continue. And you might actually see 9,900 on the Nifty. So I think the next major support, there is no support for the Nifty all the way till 9,900. So 200 points down is where you should see some meaningful support coming in. But that is contingent on whether or not we get a close below 10,150. 10,150 is a very crucial technical level.
I'm told Hadrian Mendonca is also with us. Before we get to specific stocks, Hadrian, thanks much for joining in. An initial sense from you, there's a lot of pressure on the large caps for sure, and some mid caps crumbling too. Is there a trade that anybody can initiate, Hadrian, at these levels after the correction that we've seen on any of the key indices?
Yeah, definitely. Nifty is, looking pretty weak here. It's losing strength as each day passes by. In my opinion, still, I'm of the view that caution should be the way ahead. First, the 21-day moving average was broken. Now the 50-day moving average is broken so swiftly as if it never existed. So, weakness is really gaining momentum here. Weekly chart analysis is also indicating that the whole breakout that we saw above 10,150 is completely retested, and instead of actually finding support around there, it has actually broken below the same. So another gentleman was saying 10,150 is going to be very important, close below which things can get even worse for Nifty. And if we close below that, then I'm of the view that I'll have to revise my target of 10,100, which I earlier told you, to close to the 19,900, 19,950 levels, because going forward things will get even more difficult for Nifty to hold on to below 10,150 closing basis. So definitely one can go short on Nifty at these levels as well.
Okay, so we have the management of Somany, and we'll just get to him in a bit, but request Abhishek Somany to just stay on for a moment longer, because the markets are a bit of a limbo. 10,109 now for the Nifty, and correcting even more swiftly now. Let's get to specific stock strategies. Hedrin, to you first. Any stock recommendations at this hour?
Yeah, pretty bearish on Cipla, the heavyweight. The stock is actually getting weaker and weaker. Stock is on the verge of an inverse flag pattern breakdown on the daily charts. Plus, it has also slipped below its 50-day moving average. So the overall setup is indicating that further weakness is here to stay. So one can go short on Cipla for a target of 575, and should keep stop loss close to 612.
Okay, what about you, Kunal? Your specific strategies?
Well, bunch of stocks that have broken down. First, I think Jindal Steel has turned course. Although I was expecting for the stock to rally, it's actually cracked and has broken a support. I think it's likely to go down further. Still can be sold short with a stop loss at 164 for a target of 154. Then I think Adani Power has broken a major support. It's also got a double top pattern on its daily chart. I think the stock should slide to 31 levels. One can sell at the current levels with a stop loss at 32.5.
Okay, gentlemen, stay on, so much more to talk about. But just joining us on the show is the Managing Director of Somany Ceramics, Abhishek Somany, to talk about the numbers and the quarter gone by. Thanks so much for joining in, Mr. Somany. Apologies, but the markets are on a bit of a tailspin, so we'll have to keep this slightly short. But put this quarter into perspective, because you saw a dip of about 11% in your bottom line numbers. If I'm not wrong, your revenue numbers as well were flattish. Was this a GST impact, and will that correct itself in this quarter 3?
So on the top line, we've grown by 5.2%, which we're reasonably happy because of the impact of the GST. I think there were a lot of hiccups in July and August, which have started getting streamlined. And now the welcome change of from 28 to 18% will only give us that impetus. On the bottom line, we're absolutely on the ball since last year. If you see, there's a 1.5 crore rupee exceptional item which should not be considered, and the other one is that we've taken a hit of about 80 lakh rupees per month on the basis of gas. All the other states except Haryana has reduced their rate on gas, the VAT rate on gas. But the GST rate in Haryana refuses to come down, and it's kind of unfair that Haryana government is not bringing down the rate on the GST on gas.
Mr. Somany, as you rightly mentioned, GST was the key issue. If you could give us some more details as to what kind of disruption did you really experience? If you could share the volume data, was there some destocking, and is it already reversing? Have you got the indications that it will reverse completely in this quarter?
First of all, we had a decent amount of restocking in July, but then because of 28%, considering that our earlier rate was 12.5 plus 5% sale tax, so at 17.5 there was an X amount of evasion which was happening, and 28% it became that much more lucrative. So while there was a restocking in July and August, considering that the dealers were hoping for a large amount of compliance, but when they saw the government not really cracking down on compliance, the incentive to do evasion went up, and therefore the primary sale happened, but the secondary sale was sluggish. And it was an early Diwali for us, therefore generally a month before Diwali purchases stop as far as style is concerned, so that again really hit it. But what really worsened it was not last quarter, but October was a big shock, where October was just not good, and had the government not made this 28%, 18%, we would have been hurting. So I think we welcome the change, and going forward we're very, very positive with this 18% GST. And I think in the next quarter or two, the GST other effects will start getting weeded out, and also we are hoping that the e-way bill is put into place sooner than later.
Will you pass on the benefit of the rate cut from 28% to 18%?
100% of the benefit would be passed on. We're a commoditized product and we're really concerned with market share, so all of it would be passed on to the end consumer.
We wish you all the best for that and more. Mr. Somany, thanks so much for taking the time out and joining us, and all the best for the quarters ahead.
Thank you.
That's Somany Ceramics with their thoughts on the quarter, but it's worsening now, 10,104. At the risk of repeating, we're not trying to put some alarm bells here, but we are very close to 10,100 now, and that is looking like we're getting taken out in a bit of a hurry. I might add, the last 15 minutes, the fall has been rather steep and swift, I might add. So let's just wait and watch if indeed this worsens or no. Pharma stocks have corrected quite viciously today, led by Sun Pharma, of course. Any thoughts here, Hadrian?
Yeah, the overall, the pharma, if you see the pharma index, has been looking pretty weak from quite a long time now. And if you do a quick chart check, it is actually following its lower top, lower bottom cycle. Especially, it has been unable to surpass its 200-day moving average. So that turned out to be a big, important level which it had to break and sustain above. Unfortunately, it failed to. That's what we saw, all the whole pharma package once again into doldrums, and all the heavyweights that were supposed to be bargain buys are turning out to be, stuck into people's neck. A lot of people are actually stuck into long positions in pharma stocks, and I think things can get a little worse from here on for pharma companies, because after Sun Pharma and Lupin, what has happened in terms of the FDA and the results that came out, I think there is still more pain going forward in the overall pharma.
Well, but still there are a couple of stocks from the broader markets which are just holding about. Pull up Tasty Bites intraday chart. That stock's seen a sudden spurt. Remember, the numbers had come this week which were pretty strong. Currently it's trading with gains of 8.5%. You've also got Shreyas Shipping. That stock's seen gains of over 10% coming about, and that's trading above the level of 500 right now, up almost 12%. Mr. Chokalingam, I'll just come to you on these two stocks, but one more. Panacea Biotech has also seen a sharp jump of 9% in today's trade. Any of these stocks that you track?
No, I'm sorry. Unfortunately, I don't track these companies.
Okay, not a problem, but anything from the pharma space which has taken a big beating today, would you like to accumulate something at these lower levels?
Certainly, we have been accumulating JB Chemical. Just as a disclosure, we also invested personally. Now, after seeing Unichem Labs formulation business sale, our confidence in the stock has increased. Unichem, we have seen, has sold the business at 4.2 times valuation on formulation sales size. Now, if you look at JB Chemical in September quarter, formulation sales have grown at 25%. When the industry growth is in single digit, this company could increase the sales by 25% year on year, and it has got about 1,000 crore of formulation sales. So, if apply same benchmark, I think the intrinsic value of JB Chemical is phenomenal. So, therefore, this one stock we have been aggressively buying. Also, it has got a strong balance sheet, and it has got a cash close to 400 crore. And its exposure to US market is only around 10%. So the US FDA risk is also minimal. So therefore, this is the only stock I am extremely bullish at this point in time.
Right, and we've reached 10,100 on Nifty now. It's trading below that mark of 10,100. Clearly, the selling pressure is pretty intense today. The Bank Nifty, remember, the support that everybody was talking, and it had protected throughout the day. 25,200 has also been breached, and Bank Nifty is trading below that mark. Kunal, I'll come to you. At these levels now, would you think somebody should take any sort of fresh short positions or just stay away from the market?
I think the best course of action, would be to wait some bit. Towards the end of the day, if the market closes below 10,130, 10,140, I think that's when you should initiate a short. I would still wait and watch, is because there is a very high probability that you might see a later recovery, and the markets may actually close above the major support level that we're thinking has broken. So I think one should wait and watch and give the benefit of doubt to the bulls for the moment.
Okay, so one should wait and watch. But look at some of the stocks which continue to fall. Adani Power has corrected another 4% or so. Nalco is down around 1.5% more, so it's total 6.5% now. IB Real has corrected another 2%. Suzlon has corrected another 2%. So these are some of the stocks which continue to come under pressure. Muthoot Finance is one stock which is slipping further, is down 1.5% now. So we see kind of is quoting at the day's low now. Infrastructure, majorly GMR, is down to another 2.5%. So total 9.5%, close to 10% fall on that stock now. And the list is really very long, and you can see that every 5 minutes these stocks are making a new low. So the selling pressure remains unabated clearly. Let's talk about tire stocks that have been gaining steadily today after rubber prices fell sharply over last 2 days. So exactly how does the margins get impacted for the tire makers? Yatin Mota is here to tell us all about that. Yatin.
Thanks for that, Pradeep. And if you look at the tire stocks, clearly, from the growth front and from the raw material cost front, they have come under a sweet spot. If you look at Deutsche Bank, they are forecasting a 12% CAGR for the next 2 to 3 years as far as the entire tire market is concerned, especially the two-wheeler, three-wheeler, as well as the passenger vehicle segment is expected to outperform the overall matrix. As far as the growth is concerned, and the kind of improvement that we are seeing in margins could be phenomenal for most of these tire companies. Truck tire demand also seen growing 8%. And look at the growth forecast for earnings of major tire companies. MRF CEAT, a 16% CAGR is expected in the next 3 years. Apollo Tyres, a 12% earnings CAGR is expected. Of course, Apollo Tyres, we have the expansion plans kicking in, so probably earnings would be under pressure. And look at the revenue breakup for the tire makers. Trucks and buses form a majority of the overall revenue pie for the tire makers. And also we have the two-wheeler, three-wheeler and the passenger vehicle segment dominating 14 to 13% respectively, and rest of the other segments form the bulk of the portion. But if you look at the raw material costs for all of these auto component makers, rubber prices have corrected significantly. So we have both the natural rubber prices as well as the synthetic rubber prices falling continuously in the last 1 year. And if you look at the price trend, clearly it has been on the downward trajectory side, especially the synthetic rubber prices have fallen, and 40% of tire cost is rubber. And most of these tire companies hold the inventory for 30 to 45 days, and probably it takes 1.5 to 2 months for tire companies to really gain from the kind of fall in the raw material cost that we are looking at. So probably third quarter, fourth quarter onwards, we could see a significant amount of margin expansion for most of these tire players, is what the data is suggesting at this point in time. Of course, the most bullish brokerages like Deutsche Bank, Edelweiss, everybody has a big target price on most of these stocks, MRF CEAT and Apollo Tyres in particular, when they see a 25 to 30% upside.
Thanks a lot for that. I think that's a well depicted set of data points that you need to watch out for when it comes to investing in the tire companies. There are some shrimp companies that we'll talk about as well, but this is as far as the tire companies go, which have kind of have been relatively resilient. Let's put it that way. Any thoughts here, Kunal? The tire stocks which have held out reasonably well today.
Well, I think there are out, and if you look at their chart structures, they've been outperformers. There are a couple of stocks which I think can be bought into in every dip, and of course topping the list is Balakrishna Industries, which has been a stellar outperformer, has broken through 2000, now trades above it. I think if you see a decline in the markets and the stock were to correct, I think around 2050, 2000, I think makes for a great buy. I expect even higher levels for this. So I think that is a great stock to accumulate. MRF2, I think at the current levels or on decline, can be bought into. So these are two top picks in that space.
Okay, but that's not all. By the way, the markets climbed back about the 10,000 mark. So 10,114 now, just playing it by the hour, by the minute, quite frankly, and giving you updates. But after dipping briefly below the 10,000 100 mark. We are back above those levels. Not that 25 points means anything substantial, but just keep that at the back of your mind. About 0.5% odd, or slightly more than 0.5% off for the Sensex. Nothing too ominous, but just keep your eyes on these levels.
What is also interesting, Neeraj, if you look at it, Reliance Capital and Reliance Nippon have also kind of regained around 1% or so. So there is a bounce in even these stocks, the most beaten down scripts that we have been tracking through the day, still down 9.5% on Reliance Capital, but a recovery of 1.5%. It shows that maybe there is some support, and probably these individual stocks are also reaching those critical support levels and finding a place to bounce from.
And let's see, too soon to say, but you never know. We'll figure out over the course of the next few trading hours, today and tomorrow combined. But shrimp companies are certainly doing well. I think Apex Frozen Foods and Waterbase reported September quarter earnings post-market hours yesterday. Sumit has done some interesting analysis on whether there is something common in terms of the growth between these companies and why is it that they could be on the up move today. Sumit?
So yesterday Apex and Waterbase both came out with its second quarter result. Now Apex is completely a shrimp exporter while Waterbase is into shrimp feed and shrimp export. So we'll first talk about Waterbase. Now let's see how Waterbase result was. Now revenue were up around by 21 crore to 21% to 97 crore, while EBITDA, if you see, it jumped 3 times compared to last year to 15 crore. Margins, on the other hand, were up by around 910 basis points to 15.6%, while net profit rose by 265% to 9.5 crore in the second quarter. Now, the factors which led to this kind of jump was, first thing, very low raw material cost. Now, raw material cost in this quarter was around 22% of the revenue, while in the last year it was around 67 to 70% of the revenue. Along with this, the finance cost of the company, now that dropped by around 97%. And in this quarter compared to last year, the finance cost was lower by 97%. These two reasons led to the boost in EBITDA and then the bottom line. Now if you see Apex Frozen Food in that hand, Apex Frozen Food did not give the comparable numbers, so there was no point in showing the Q2 numbers. But what was interesting in Apex was these numbers. Now in the first half of financial year 2018, the company's revenue stood at 533 crore. That is what, around 77% of the revenue that the company did in full financial year 2017. EBITDA was at 55 crore, 10 crore higher than the full financial EBITDA for the full financial year. That was around 45 crore. EBITDA margins at 10%, while for FY17 it was at 6.5%. And net profit for the first half of financial year 2018 was at 58 crore rupees versus 38 crore rupees that the company did in the full financial year 2017. So that's the kind of jump that the company has seen, and because of this the company has been rallying. Now today the stock had hit an upper circuit of 5%, and if you see since listing, the stock is almost up 3 times. Now the shares were issued at 175 rupees and the stock is now trading at 485. That is, the stock has jumped almost 3 times. Now if you see the valuations of the company, the price to earnings on an annualized FY18 earnings stands at around 17.5 times, and that of Waterbase is at 15 times. Market capitalization to sales, for Apex it is at 1.4 times, while for Waterbase it is at 1.5 times. And when you see price to book, of Apex is 6 times, while that of Waterbase is 6.1 times. Now these valuations of Apex is after the stock has rallied like 175%. And if you see the CAGR growth that the company has shown in the last 5 years, also it has outperformed Waterbase. Apex revenue and net profit grew at a CAGR of 29% and 27% compared to 21 and 20% of Waterbase. So Apex has been outperforming Waterbase, and you can also see the similar thing in it, similar rally in its stock price that has happened in the last few months.
Well, let's wait and watch. Post numbers rally coming in for both of these. Sumit, thanks for putting that into perspective. So within all the gloom and doom that we have today, not really doom, a bit of a gloom, there's some green which is holding out well. I don't think we've spoken about the commodity names, at least in the last 15-20 minutes. Vedanta, Hindalco and a few others which have corrected quite strongly. And the other one that I want to chip in is Bharti Infratel, which after the deal yesterday, and it corrected up to 400, then went down to 396. In today's session has corrected a bit more, down another 4%, 15 odd points, now down to 381. Any thoughts out here, Hadrian? Either Vedanta, Hindalco, and then if you have a thought on Bharti Infratel. We spoke about this yesterday as well.
Yeah, I was expecting Infratel to actually find some support close to the 400, 410 levels. That's where we would go long in the stock, but unfortunately that has not happened. It has gone completely reverse, and we've been caught on the wrong side. But I think the weakness has further gained momentum in the stock. And I think 380 is something very crucial to watch out for Bharti Infratel, because that's the long-term 200-day moving average, because that will actually decide whether the next move will be a bounce or whether a crack below 380 would take the stock further down. So 380 is something very crucial. A close below 380, I would advocate caution in the stock further going forward. And if you're having long positions, then definitely one should think twice before going longs further on the stock, because the trend has actually turned around and it's looking slightly weak.
Well, some stocks are still holding on to their gains. Pull up Indo Count, that's seen gains of almost close to 5%, and also Page Industries, that's trading at its fresh 52-week high. Indo Count now up 5%, Page Industries up almost close to 4%. Hadrian, do you see any fresh position that can be taken, considering both of them are in the futures and options space? Can one take any fresh longs here?
Yeah, definitely. Page Industries is a complete outperformer. It looks like, it seems like it has got nothing to do with what the Nifty Bank Nifty is doing. It is in its own world, and Page Industries is a very strong uptrending stock. If you see the overall structure, it is in this higher top, higher bottom cycle. And the structure doesn't seem to break even if there is a small correction. So definitely, I would advocate Page Industries, if a trader wants to go long in the stock.
Hadrian, one stock outside the ADAG pack which has kind of recovered is IB Real. Not recovered, but there is some support at lower levels, and I can see significant volume also. What's your call on IB Real for an aggressive trader looking at maybe a BTST or a day or two?
I think I can sense a little bit of weakness even in this stock. So any kind of upside that or any kind of support that the stock might take, will turn out actually to be an opportunity where one can actually use a small rally to once again sell into Indiabulls real estate. So I think the overall real estate pack is also under pressure. Even HDL has fallen significantly. I think Indiabulls real estate will follow suit, and I don't think so it will be isolated from the sell-off that is currently going on.
Okay. Mr. Chokalingam, before we thank you, one final question really on some of the stocks which are holding out today, the oil marketing companies. Fundamentally, is there a case for somebody to go out and buy them after the correction that we've seen over the last 1 month?
Certainly, I would completely agree with you for a couple of reasons. Strong balance sheet, and oil price started correcting in the last few days, and I believe in the short term it could correct another $3-4. That also will be positive. And if you look at a company like HPCL, they are trading at around 9 PE on 1 year forward earning. In this bull market, it is very difficult to find such attractive valuation. So therefore, I would strongly recommend OMCs like HPCL.
Okay, Mr. Chokalingam, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. As I look at the futures market, the Dow Jones will start off today's session as things stand about 100 points lower. So while it ended only 30 points lower, it will add on another 100 points on the downside or thereabouts when it starts off trade, as the trades look like today. So the global markets are not supportive in trade. Keep that at the back of your mind while you're going to take your final positions in trade. 379 now for Bharti Infratel. And I tell you what, half an hour into the last time that we marked the ADAG group stocks or the Reliance Dhirubhai Ambani group stocks, and they are not recovering at all. Almost all of them have the pain points lasting for themselves. So it's not turning out to be a very, there's hardly any kind of recovery. I agree with Pradeep, there's some bit of stability at the lower levels, but there isn't any dramatic recovery that we're seeing in any of these stocks in the session today. Okay, Adrian, before we thank you, leave us with a strategy, an STBT or a BTST.
Yeah, I'll give you an STBT. We are very bearish on Capital First. November futures, one can actually go short on the stock. For the reason is that because after a long time it has broken below its long-term 200-day moving average. Secondly, it has also broken the neckline of a head and shoulder pattern, which is another negative point for Capital First. So, if you do a weekly chart check, it is indicating a bigger breakdown. So this overall setup for Capital First is actually indicating that we may see more pain going forward for the stock. So you can go short on Capital First November futures. You can play for a target of 664 and keep a stop loss around 698.
All right, Adrian, thanks a lot for joining us today. Those were a couple of the trading strategies which he just highlighted. Well, clearly, market is rewarding good earnings. If you could just pull up the stock of Automotive Axles. I know we don't talk about such counters, but it's a company with a free float market cap of almost 400 to 450 crores. I'm talking about Automotive Axles. I think the numbers came in just a while back today, and stupendous set of numbers. If you go by the bottom line figure, 20.4 crore is the profit. So it's nearly double versus 10 crore which was seen in the corresponding quarter. So this is one stock which has actually stood out in the broader markets. Automotive Axles posting good set of numbers, and clearly markets also rewarding the same, up almost 10%, trading above that mark of 1,000 at 1,060 currently. Well, on that note, let's also get you the Fab 4 stocks of the day, and as usual, Yash Upadhyay joins us to take us through that. Yes, did you manage to find, pardon me, any stocks which are trading in the green?
Yes, Navneet, and good afternoon to you. So we kick things off with Fortis Healthcare. The stock has snapped its 3-day losing streak and has gained the most since May of 2016, gaining close to 8% right now after the company had offered to acquire all the assets of Singapore-listed RHT Trust for a combined enterprise value of around 4,600 crores, if I'm not wrong. Moving forward, we also have Panacea Biotech. Now, this one is sitting at gains of around 10% on the back of news that the company has entered into an agreement with Technology Board of India for financial assistance of close to 29 crore rupees. Also, we had a couple of tire stocks buzzing in trade today. We had Yatan Motors speak in depth about it, with TVS Sri Chakra gaining close to 6.5% after the company, after rubber prices, had hit their lowest levels in over 2 weeks in the international market. So do watch out for this one. And lastly, we have Camlin Fine Sciences. Not a very fab move there, but had surged close to 6.5% earlier in the day after the company had entered into an agreement with Lockheed Martin subsidiary for the supply of specialty chemicals.
Well, about 1.5% higher. Thanks a lot for that, Yash. I must say though, Mehboob Nirani, Managing Director and Chief Executive Officer at GEMS Consultants and Investment Advisors, joins us right now on the show. And he started off our conversation that we were having off air with a gem. He asked me, if you're talking about Fab 4 stocks, how come that some stocks which are having a fabulous move today are not featuring? So Mehboob, on a day when the markets have cracked so badly, you're still managing to find companies which have done remarkably well.
See, it has been over 7-8 months that everybody is saying markets are overvalued. I have heard voices, people who were stating in December post demonetization that we are going to go to 7,000, suddenly becoming very bullish. But yet at the end of it all, everybody was saying pockets are overvalued, people should be a little bit careful. I have learned one thing in this market, Neeraj, that to make money in this market, you need to be invested in the market. Staying on the side doesn't help. Because if you try to time the market is going to punish you. So all those people who have been saying it's overvalued have lost the entire rally over the last few months. The point is, should I sit on cash right now? It's not a very easy decision. So somewhere in between you need to do. And that is buy into companies, into stocks which are still undervalued, where the downside is limited and you are certainly going to get an upside. There are pockets over here. Now, what I'm trying to state is that if we have the market correcting 5% more, whole lot of mid caps and small caps are going to fall by 20, 30, 40% also. It's happened before, it may happen again. And it's happening over the last few days. So what should I do? Go and buy into stocks which will falter by 5-7% only, and certainly give me a 20, 30, 40% upside over the next 1 year, and try to identify such stocks and remain invested in the market. Because sitting on the side, I promise you, I promise you that you will feel very intelligent over the next few days. Oh, good, I'm sitting on cash, market has come down further. But on the market rallies, you will not believe it and ultimately re-enter the market at much higher levels. And that has always happened and will happen again. So I believe this is a little dicey time for the market. The momentum is going out. Not much of money has come in over the last 5 days. And if money doesn't come in for the next 2 to 3 weeks, you can understand what can happen to the market. So you need to suffer, you need to endure such periods only to make money ultimately at the end of it all.
It's not easy for any retail investor to kind of understand it. Help us with some such ideas that you will be really watching for, where you would like to get in at a decent correction like 5, 7, 10% you mentioned.
I would say that if a retail investor is not concentrate too much on the market, he will end up making money at the end of it all. But if he is trying to time it, exiting today, trying to re-enter tomorrow, which a trader tries to do, well, you will suffer a beating here and there. I would say some of the ideas of mine would include a company like Bama Lorry. At 260 rupees is one of my favorite, all-time favorite stocks. I think a company last year gave a 3 shares for 1 share bonus. At the present level, it's a mini Navratna company and will become a Navratna over the next 4 years. The company intends to increase its turnover nearly 4 times in the next 5 years. You can understand what can happen. Valuation-wise, very cheap, debt-free company under the oil and gas ministry. It is in logistics, it is in lubricants, it is virtually in at least 5 or 6 spaces. The multi-portal hub, which it has set up in Vizag, is going to become operational somewhere in March 2019. And I promise you, when that happens, the company will move into a different league. At 260, 265, if you ask me, the markets can correct by 5%. I promise you the stock is not going to go below 250. And I think this stock should be at least 350 next year this time.
Neeraj, I remember Mr. Chokalingam was here with us. It's been one of his top picks also for the longest time, I guess, in the last 5 to 6 months. But you've been talking about these gems. Do you think there is more value now in the broader market compared to the large cap stocks, which everyone's been talking about? The valuations are too high right now, even if you talk about Nifty multiples.
I'm saying there's too much of froth in the market. Okay. There's too much of overvaluation in many sectors. So I would say that stock picking is becoming more and more difficult every passing day. So to identify one sector and say, I like this sector, it's not very easy because most stocks have been identified well by the market and most stocks have run ahead of the earnings. I think the problem for the Indian markets right now is corporate earnings. If you see the last 3 years, the corporate earnings have hardly grown up. It's just gone up by 6%, the Sensex EPS. So at present valuation, it is around 20 times 2017-18 EPS. So it's not very cheap in but at the end of it all, even earnings are not picking up. So what should one do? One should try and identify, again I'm repeating, stocks in which, what are the 2 categories? Have 2 parameters. Number 1, buy into a company like say Sterlite. I'm very confident about it. It's given me a 150% return and I'll say it's going to double from here. Does it mean it's not going to falter by 10-15% from the present level? Certainly yes. So buy into companies which are doing well, which will continue to do well. Sterlite is one, Edelweiss is one, and otherwise go in for slightly undervalued stocks like say a Bama Lorry, say a First Source Limited, say a Sinclair's Hotels. Such type of stocks where there is no downside, or if there is any downside, it's going to be 5-10%, and ultimately it's going to be on the higher side. Trying to time the market and say, oh, I am right now going to withdraw. I've already lost a part of my profits in the last 7 days fall in the market. As the market falters a little bit more, I don't want to lose further things. Sit on the side and re-enter the market. I think you're going to make the brokers more richer than yourself.
I think this common fallacy, right? People don't own Nifty futures in the portfolios. They own stocks. So irrespective of, yes, you got to keep the market levels in your mind. But having said that, if indeed stocks come within your valuation comfort zones, that's when you need to try and buy into those companies as opposed to being fearful of what if the Nifty were to fall from 10,108 to maybe 9,600, 9,700, 9,800. Let's not try and play that game. At least that's not what I think our guests would encourage as well. Just before we move on though, I just want to mark what the VIX is doing. The last few days we've seen the volatility bump up a bit. I don't know what it is in the session today, but the India VIX should come up on your screen. No, not too much really. You would have normally seen with the way the ADG group stocks and the broader markets are correcting, that India VIX, you would have anticipated it to be much higher. But maybe the bit of a up move in India VIX already over the last few days. But certainly, this is taking me a bit by surprise. I would have thought that India VIX would have had a higher percentage gain today than what it is showing right now.
Levels,
yeah, I think that's the key. It's moved
from 11 to 14.5, which is a sharp move that one has seen on India VIX. Can we also pull up the Nifty futures? Remember, we were just mentioning how the premium has been on the higher side for the last few sessions, and historically, if you go by this data, with higher premiums, it's very difficult for markets to make a move on the higher side. So once again, the premium is still hovering around those 33 to about 40 levels, which is still on the higher side. Let's talk about some sectors then. So would you put your money in pharma? I think this is not at all.
Last 5 years I've been negative, and I'm saying again, at the cost of repeating myself umpteen number of times, it's over. The sector is over. You will never get the glory days again. I'm saying it. I'm saying it. What I'm trying to say, the top which you're seeing is never going to come. Does it stop me from trading in the stock? Go and trade because it's under-owned. Sun Pharma, suddenly Halol comes and it could be 2 days of upper circuit or whatever that means. But who cares for it? If I have bought the stock at 1200 and like an idiot, I've heard a whole lot of experts going on saying every fall it's a buying opportunity, buying opportunity, buying opportunity, because people are over-owned. They are going on defending the valuations, not knowing that the story of pharma is over. It's the pricing pressure, it's the regulatory problems, the number of molecules coming out of patents is falling down, more and more companies are vying for it. What is there in favor of it? The only thing in favor of it is under-owned. At last, people are accepting the folly of not having sold into it. And somewhere along the line, there will be smart money coming in for a quick trade, make a 10, 20, 30, 40% and move out. I remember when I was negative on the stock, Sun Pharma at 1100, people were saying, I said, I will not be able to defend the valuation at 500 rupees, and people were saying 500 Sun Pharma. I said 500 is the minimum it can go down to.
Where I don't agree with you, Mehboob, where I only don't agree with you is that while the US exposed pharma companies would definitely have these pressures, there is reasonable growth that Indian exposed pharma companies are showing, where the global exposure, the export-oriented opportunities, 2, 3, 4% of sales, or pharma-related companies, the diagnostic companies, etc., which are showing reasonable growth, and they don't have the US FDA problems.
I think you also need to understand the number game. If you look at the top line and the bottom line of these companies and now extrapolate the growth which is going to come, you will accept the fact that even at the present valuations, some of them are expensive. Now, am I against a stock like, say, a stock which I identified long ago, Kaplan Point Laboratories? At 30 rupees, now it's worth around 3,000 rupees. It's a 100 bagger. I still like it because no debt, negative working cycle, a very different model. So there will be pockets here and in the pharma sector. I'm not saying no. What I'm trying to state is I still know a lot of investors, and I think you used the word retail investors. I still know a lot of retail investors who still feel they are great companies, the price will come back. I promise you a time may come. I promise you a time may come where the children will curse them for leaving them this type of shares.
You know what, Neeraj? Every time the stock used to fall to 500, Sun Pharma, people used to say these are the attractive valuation. This is the attractive price. But I really can't prove you wrong.
I have heard people saying from 1,000 rupees. Every 100 rupees for people have gone on buying into it, and now people are given up. And when they give up, a stock will move up by 20, 30, 40% and surprise many people. So I think from a trading angle, somewhere on the line over the next 2, 3, 4 months, quite a few of these pharma companies, like what Divi's Labs did some days ago, quite a few of these pharma companies are going to give you a lovely trading opportunity to trade on the long side. When I say the story is over, I'm saying the peak prices which we have seen may never come back.
There's a quick update on Edelweiss Financial, where QIP has opened. Floor price is set at 285 rupees. That stock should come on your screen. 279, 280 is the current price, and the floor price at 285. So it's actually quoting in the market at a discount, and QIP price is a bit higher than this.
But okay, to be fair, I mean, which is fine. I mean, because they would have done the QIP pricing, not really based on what a 1 day's price would be. But yeah, I mean, it's a stock that has had a really interesting rally. I know it's time for talking about F&O, but since we've brought up Edelweiss, just want to get in Mehboob's view on it, because I think on this very platform as well, Mehboob Irani in the past has come out and recommended Edelweiss. The stock has made money for investors. I mean, whether you bought it at 50, 55, where it used to trade at 3 years ago, or over the course of the last 1.5 years when it's had this lovely move from those 85, 90 levels all the way to 270 odd. Is this story still alive? And this would then therefore not apply only to Edelweiss, but a clutch of companies which have a similar business model, Mehboob.
I think I'd put it this way, maybe a year and a half ago, that you need to buy at least one company in this complete space. Be it a Motilal Oswal, be it an India Infoline, be it a JM Financial, be it a Centrum, the latest now, which is possibly attracting a lot of attention now. or Edelweiss. And I had preferred Edelweiss because I have seen this company grow from a simple broking company to an investment banking company to a company which has its own research house. Then ultimately it went into insurance, in which it is still losing money. Hopefully it will go out in the next 1-2 years. But the asset reconstruction business, I think this company is number one in the country and come ahead by at least a mile as compared to others. And this is the single biggest trigger which I felt attracts attention and you should give it marks. And possibly it's worked very well. Now your question, and I think she had asked this question earlier. If I was holding an Edelweiss and expect the markets to falter, should I exit, stand on the side? My answer would be no. Because if you have seen the stock go from 90 to 285, it can fall to 240, 230. I'm not disputing it. But I don't think many investors, especially people watching you and me right now, are in a position to exit at 285 and re-enter at 265. For a stock which I believe should be at least 400 to 500 in the next 12 to 18 months, and I still stick to it. I would say I'm still seeing a 40% upside and maybe a temporary 10% downside, and I don't bother too much about it. So if somebody wants to buy fresh and is a very short-sighted investor, he can possibly stay out. But if somebody believes, oh, this is the stock which I don't mind getting married to for the next 1.5 years, I think the stock should be at least 30, 40, 50% higher from here. So I give Edelweiss a clear thumbs up even at the present level.
Okay, I wouldn't stay on. So much more to talk about. We're going to talk about the Reliance Dhirubhai Ambani Group stocks as well and the correction that we've seen today. By the way, they are the top 4 losers on the BSE 500 or the NSE 500. But, and actually we should just bring up the intraday of Asian Paints just one before we talk about the FNO space. Just want to bring up the intraday of Asian Paints because I think it's just had a bit of an uptick. Yes, there on your screen, just a bit of a bump up that we're seeing in Asian Paints. But Navneet, maybe a couple of minutes off time. But stocks that could get into the ban or out of the ban.
Sure, and there are Reliance Group companies which do feature in my list today. Let me talk about the stocks which are very close to entering the ban. I mentioned Granules India yesterday, that's just at the borderline of 94.5%. Remember, for a stock to enter into the FNO ban, it has to breach the 95% of the market-wide position limit. So Granules India, I've seen some open interest addition coming up for the future on the future side. TV18 Broadcast is the other one, and Reliance Communication, Reliance Capital, both of them, if you look at the total open interest, it's hovering between that level of 89 to 90%. And considering today's fall that one has seen, you can see some fresh shorts build up and also positioning on the option side. So probably these two stocks could also enter, and IFCI is the other one which may just enter. Stocks which can come out are Jain Irrigation, 82% was yesterday's open interest as a percentage of market-wide position limit, and HTIL and India Bulls Real Estate are some of the other stock which may just come out for tomorrow's trade. And talking about the FNO side, just want to mention here, the 10,300 put writers are clearly running for cover. Look at that, because I've not seen open interest unwinding coming up there. And today it shed almost 8 lakh shares, and there's been heavy writing that has come in for the 10,200 strike on the call side, as 22 lakh shares have been added there. But on that note, let's also get you some dealer check going when the markets are correcting. What are the dealing rooms recommending? And to take us through the same, Yatin Mota and Darshan Mehta are joining us. Yatin, over to you first.
Thanks for that, Navneet. Of course, some bit of panic in the dealing rooms, we had at a very important Nifty 50 level at the 50-day moving average. So probably a lot of people are expecting some bit of support there. Probably the Nifty put call ratio also is close to 0.8, which means that panic might settle at the current levels. But Reliance Capital, that is one stock wherein domestic funds are said to be aggressive sellers. And I was also looking at the pledge shares data, which is significant for the Anil Dhirubhai Ambani Group. So, there is a buzz in the market that probably pledge shares of the promoter also coming into the market. Of course, not confirmed yet. NCC, that is also one stock doing well after the quarterly results. Yesterday, we saw some small blip coming in. But today also there is some bit of buying which is happening in, so dealers are recommending a BTST as far as NCC is concerned. And finally, we have Vedanta. And in general, a lot of FIs are said to be sellers in metal names, and Vedanta being one. So dealers expecting further weaknesses after we have a lot of metals, base metals correction which is happening in the marketplace. But Darshan has a few more stocks.
Yeah, so Fortis is something that dealers are talking about, up almost 7%. The entire change that happened, the RHT deal that happened, the analysts do indicate that this will simplify the corporate structure, create a lot of shareholder value. The group is making noises in the right direction, so Fortis is one of them. C8 came out with numbers which were above what the street was anticipating. anticipating. And with rubber falling almost 6%, tires as a stock is something that is attracting the HNI currently. So that is something that dealers are talking about. And finally, Jet Airways is the last stock that dealers are talking about. It's managed to come off the day's high, but remember there's an analyst meet on Monday in which there could be some bit of strategy discussion, and that is something that dealers are clearly watching out for in the counter.
Well,
all right, Darshan and Yatin, thanks a lot for bringing all those details. But just 10 minutes for the markets to close. Let's get you some trading strategies going. Kunal, what are your top trading strategies at the moment?
Well, one stock which I think can be bought into at the current levels is India Cement. It's breaking out as we speak. I think it's cleared this resistance, intraday resistance at 167, now trades at 168.5. I see it going to 178, 180 over the next couple of days. So I think this can be a great BTST stock. One should put a stop loss at 162 and go long on India Cement.
Okay.
These are some of the strategies, as we can see. Very few stocks that have managed to actually hold on, but NCC is one that Yatin was also talking about, has interestingly gained in last hour of trade as well, and it's going to close at day's high. If you really look at this stock, it has gained yesterday and today also in a falling market. Mehrbun, do you have a view on this stock? Are you tracking?
No, honestly, no.
So if you have to play the infra story, what would you really like, if at all you want to play infra story?
I think after being very negative on a company which many rate as a blue chip and being proved right, I think I've started looking at Larsen and Toubro very positively. I don't think this stock should be going below 1200 rupees even if the market corrects a little bit more. So I would say that's the best proxy for whether it's engineering, whether it's capital goods, whether it's infrastructure. I think it's the best. Another company which I'm looking at it a little bit positively, but so far I think it's failing to perform the way I was expecting it to perform. Mid-cap infrastructure company is Man Infra. Somehow it's not doing much. I have been quite impressed with the balance sheet of this company, and I'm just waiting for one or two triggers here and there. And I personally believe the stock, which is just going in that range between 55 and 65, can suddenly make an up move, and I think the stock could attract attention. But I'm still waiting for those triggers to happen. So it's not a recommendation as of now. So I would say the best proxy would be L&T.
Can we just pull up the intraday chart of Just Dial? It's trading at its day's low. Remember, this was the counter which was going up in the past few sessions. We had seen good amount of gains. Just Dial has seen a sudden fall just in last 5 minutes of trade, down almost 7%. Kunal, on the charts, if somebody was holding a long position here, should they just book out?
I would think so, Navneet. I think the stock has clearly broken down, although there is some support for the stock at around 490, 495. But given the trajectory, given the volatility, it's up one day, down the next. I think it's very difficult to trade the stock. So I think there is a definite chance that you might see more downside. One should exit long.
Okay, that's the view coming in on Just Dial. Mr. Rani, what would you play? The domestic theme? I know you've said no to pharma, which is more or less an export-oriented theme, but even if it is domestic, which sectors are the ones which currently look attractive to you?
I would say that, let me correct myself on pharma. I'm still saying that there could be one or two companies here and there which will end up performing well, and which, where my friend Neeraj will ultimately be proved right. Like a domestic name, which is also in exports, like Alembic Pharma. Okay. I think one of the cleaner names. Right. And you will always have the surprise packages, like a DV suddenly moving up, and finally Sun Halol will come. Stock will be up 20-30%. Hey, you were saying pharma story is over. You will ask me this question. Pharma has gone up now. So I'm still saying the same thing. Quite a few of these pharma stocks have it in them to move up by 20-30%. But the story is over. The peak prices will not come. IT is another sector which I feel good things will come, but it will take its own time. But there are names like an L&T Infotech, which I think I liked it. I still say it's the best bet in the entire IT sector. I would say that there are few names here and there, but on the whole, as far as sectors go, if you ask me, I still believe auto ancillary is a sector which there are some interesting names here and there. I would say the paper sector, which had gone slightly out of favor, should bounce back again, because I have reasons to believe with my contacts in the industry and with some corporates in the sector that paper prices are expected to firm up very smartly from here over the next 2-3 months, and reasons are going to as far as China. So there are some interesting pockets here and there. Individual names, I would say that Infrastructure, except L&T, I don't like anything. IT, except L&T Infotech, I don't like anything. Pharma, I just don't like anything. Auto ancillary is one space. Paper is one space. So, in terms of sectors, I don't think I've got much to choose from.
I want to ask you about the pocket. I don't know if you guys already asked him about the Anil Dhirubhai Ambani Group stocks, but if we haven't, what happens here? And there are no. Let's talk about it rationally. Merboon, 4 or 5 names out there. One very recently listed name, and by virtue of this correction, that name has come to the IPO price. Reliance Capital, Reliance Infra have corrected big time in the session today. Actually, not just today. Reliance Capital has been correcting now for the last 15 odd trading sessions. What does one do here? Because there are a clutch of people who have investments here. I'm sure there are a bunch of people who applied to the IPO. And while it's too early to talk about whether this is a move that will bring itself up or will go down further or no, but people don't like issues which listed a premium coming back to the issue price.
Well, I would say that I have never, ever recommended anything from the stable.
Why so?
I've always found this group very much over-leveraged. If you ask me, I think to define the debt of some of these companies, I think you will possibly need an Excel sheet to find out as to how much this company owes money to who all it owns. I am not writing it off, but I'm just not interested. As far as why it's spreading to a company like Reliance Capital, which otherwise has a decent P&L, which belongs to a sector which is growing, a company whose numbers will keep on growing, why it's ultimately spreading. So now it's like pharma. 4 names you never like, now more and more names you don't like. So when a Reliance communication is running into problem, it's spreading to a Reliance Infrastructure, Reliance Capital also, where people who are finding much more comfort relatively as compared to the other companies of the group. Now the point is this group going to be in serious trouble as far as finances goes? I honestly don't want to venture out and make a guess. But I can tell you one thing, Neeraj, there are a whole lot of companies which you and I know are having major problems of being over-leveraged. People are given it a valuation in the hope that they will come out of trouble, P&L account will keep on growing. The problem with this group companies right now is there is not much of visibility that things are going to improve, and somewhere people are now throwing in the towel.
What about the new kid on the block, Reliance Nippon Asset Management?
Honestly, not following it at all. I know that it got listed and the market speaked out. That's a joke going on the social media also right now. But, well, it's not fair to comment in a negative way since I'm not tracking it.
Okay, I think we are close to the day's end, and look at some of these stocks like Venky's that has kind of recovered a bit from lower levels. On the other hand, we have Future Enterprises, which has corrected further in last hour of trade. So it's going both ways, but the key indices, at least the levels that we were looking for, have probably sustained. Let's get more details from Navneet.
Well, Pradeep, the India VIX may not have moved so much, but clearly there was a lot of volatility which one had to see. Finally, we're closing off day's low. So Nifty above the 10,100 mark, which was pretty crucial, and a lot of analysts were watching. So closing will be above that mark. And Bank Nifty is also recovered. 25,200 was a major support. It did breach that level, but finally closing will be coming above that mark. Sensex closing with cuts of almost 160 points. And let's see how the broader markets are stacking up at the moment. Nifty 500 down 0.7%, and clearly sharper cuts seen for the small cap index, down almost 1.5%, and Nifty mid cap free float index is closing with cuts of as much as 185 points. Let's look at a couple of Sensex constituents then. Clearly you can see more red on the screen, but I'll take you through the gainers, which are very few for the day. Asian Paints, which surged in the second half of the session, was your top gainer. Private banking stock Kotak Mahindra Bank was up over 1%. Hero MotoCorp has been pretty strong. Yesterday also the counter was up. Today closing with gains of 0.5%, and couple of your heavyweights like ICICI and Infi did not register any sort of major gains, but still closing the day in green. So which were the top losers? Sun Pharma saw major cuts reacting to its September quarter earnings, closing with cuts of 4%. ONGC, Bharti Airtel were a couple of other losers. Lupin from the pharma space was also down. Bajaj Auto, which was pretty strong yesterday, lost steam today. And from the consumption space, ITC as well as HUL saw cuts coming about. And State Bank of India, not to forget, the PSU banking space was pretty strong in the first half of the session, but that also lost steam. So SBI closing the day with cuts of 1%, Pradeep.
If you look at the mid-cap space, there are quite a lot of losers, but we'll talk about some of the key pockets. ADAG that we have been looking at in last minutes of trade very closely. You have Reliance Capital and Reliance Infra as two key losers actually in this space. Coming from this group, both are down roughly 9.5% towards the end. Commodity segment or the metal was the weakest pack since the morning, and if you look at some of the stocks like Hindustan Copper, that will probably be the outperformers or the strongest one out in this pack, has also corrected by around 9%. So this is another segment which has taken a big hit today. GMR Infra from infrastructure is one stock that I would like to highlight. On the positive side, we had stock like NCC that recovered towards the last hour of trade, closing at day's high, up 5.5%. That's interesting. BASF India was another stock which gained towards the end in a weak market and closing with gains of roughly 5% in today's trade. Shreyas Shipping was another stock in small cap space that managed to hold on to its gains through the day after interesting numbers that the company had announced, where profit moved up by around 7 times, and that is probably what was really driving the market today, up 15% in a day like this. Neeraj.
Well, that's interesting. Let's just bring up the Nifty contributors. And I think Kotak Bank, by virtue of the move that it has had, would be a top pile on the gaining side. Yes, Asian Paints marginally high, contributing. It actually had a big bump up in the last half an hour of trade. Did Asian Paints, but Kotak Bank right up there. BPCL, ICICI Bank amongst the gainers. Select private banks have done okay, but you would have expected commodities to be there. You would expect Sun Pharma to be there for sure. And ITC, by virtue of the weightage that it has, is there amongst the top contributors. Note that Reliance is absent from either the top loser or the top gaining or on the contributors list as well. So Reliance is having a fairly sedate day, which is quite unlike what it has had for the last 2 or 3 sessions. The market breadth, of course, has been adverse, and I don't think it would have improved too much. So yeah, the gap yawning quite strongly. So about 1:4 in favor of the decline. So the market breadth has not been that great. And lastly, let's just bring up the heat map and then a few descriptive moves really. You see that there's just a fair bit of red on the screen, not enough green, not enough heavyweights moving up. That was probably the pressure point. But you have to admit that at 3:30, after having seen what the markets were doing between 2:30 to 3, breaking 10,100, you'd probably be happy with these levels. Let's wait and watch if these levels become slightly more adverse in tomorrow's session or no. Final thoughts from our experts though. Kunal Saraugi, before we let you go, just a quick thought on what are the levels that you're watching out for over the course of the next couple of days.
Well, I think 2 levels stand out. One, of course, is 10,200, which I think is the level to watch out now on the upside. If the Nifty manages to cross that level, I think this would be just a correction, forgotten, and markets will then again resume their uptrend. On the downside, I think the level to watch out is 10,100. If we break below that level, I see serious trouble for the Nifty, possibly a fall to 9,900, something that we were discussing earlier on. So I think that is perfectly possible if the markets do not hold on to 10,100 tomorrow. So tomorrow I think will be the crucial day. And if the markets again open on a negative note and build up on the negativity, I think you should see more downside tomorrow as well.
Mehmood, what do you think has really triggered this correction in markets, not only in India, but if you look at it, globally, even Dow futures are down by around 100 points right now. What are the things to watch out for really?
If you look at over the last 6, 7, 8 months, I think the way the global markets had performed had exceeded the expectation of the most ardent optimist. People are talking of a correction coming here and there. I think the delay of tax cuts in US could be one factor. As far as India goes, I think there are red flags coming up as far as growth goes, as far as maybe the currency goes, though the rupee is still holding very well, and as far as inflation goes. Also, if you look at India specific, I think oil going up is definitely not good news. With the GST cuts, I think there could be an effect coming ultimately on the fiscal deficit part also, which is definitely not liked by the big investors as well as the small investors also start hearing about it. They get a little bit worried. And nobody was doubting the fact that the markets were overvalued. So a correction due. For the last few months, we were talking with all these factors coming up, we are having a correction. The worrying part, which I always state is, You give me a Nifty at what Neeraj was saying, just another 300 points lower, which is less than 3%. You will see mid caps and small caps, quite a few of them coming down by 8, 10, 15, 20, 30%. And that is worrying because most of the retail money goes into such type of stocks. The point is, am I going to stand in that fall and ultimately see a higher level will now depend on what stocks you're owning in your portfolio. So it's still not too late. It's still the time to possibly look back at the stocks which you're owning and just shed off or just get rid of the stocks which you have accepted the fact but have not acted on. And they are overvalued, but I'm still holding because of the greed factor. Now accept it, come out of it and go into companies which will keep on growing, like the names which, some of them, the names which I mentioned, and which my conviction is very, very, very high.
Okay. Mehboob, one final thought really. You mentioned a whole host of names. What about investments that people would have done in the past based on the recommendations that you made, and would you want to make any revisions thereof? There are a bunch of those popular names out there. I don't want to go into individual names, but if you've booked profits out of some of the investments that you made in the recent past.
No, I think, well, I don't exactly know which names you are referring to, but I've been very consistently positive on a name like Sterlite Technologies, which I think the story has just begun for optic fiber. Along with that, I continue to like names like a Vindhya Teleling in the same space and a Dark Horse, which I'm sticking my neck out, have recommended at 17 rupees, now it's 27, it's Himachal Futuristic, where I see the stock being at least a 50 rupees stock. You need to understand the fact that the story of optic fiber, you may call it cyclical, but it's happened 3 times in the last 15, 17 years, and I think the story has just begun and will continue for the next 2 years. And China is back in favor as far as optic fiber goes. They are asking for it, and Sterlite is a global player. Edelweiss is one stock which I like. I mentioned a name like a Man Infra. I mentioned another name on the side. While passing, I mentioned in the financial space like a Centrum, which I'm looking at favorably. And allow me to state, Neeraj, a clear disclosure, all the stocks I'm personally owning it, and I'm answering your question. Well, I have not got rid of any of them, and I intend to hold on for it and continue to buy or advise people to buy the stocks, whoever are my clients. So I continue to like them.
Fair call. Mehboob Irani, leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. Time for a short break on Countdown, but back with more on the other side.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
welcome back. You're still watching Countdown with us on Bloomberg Quint Live. Well, clearly not a great session today once again. It's been a week where we've seen a bit of losses coming about from those highs of 10,490. Nifty is now trading at levels of 10,118, but some bit of respite. We closed above the 10,100 mark, which most of the analysts were keenly watching out for, but still we closed with cuts of as much as 68 points. Let's also look at Bank Nifty then, which was a bit stronger than Nifty today. In fact, not only today, in the past few sessions as well. It closed in the red with cuts of 65 points, but remember, it breached its major support of 25,200. But in the end, there was some buying which came in below that mark of 25,200, finally closing with at about levels of 25,218. Just also for the viewers, tomorrow Bank Nifty will be in focus, as tomorrow is the day for the weekly options expiry day. Well, in terms of sectoral indices, clearly because of commodities crashing in China, you saw sell-off coming in for the Nifty Metals Index, which was your top loser, down almost 2.7%. Pharma came under pressure after Sun Pharma reacted pretty negatively to its September quarter earnings, and you also had indices like Nifty Realty and Nifty FMCG which came under pressure. We learned in terms of Nifty gainers today, very few of them. Let's just pull up a couple of Nifty gainers. I guess Hero MotoCorp was one of the stocks which ended the day in the green. That's Hero MotoCorp. But on the losing side, you had a handful of losers. So clearly, even a couple of your heavyweights came under pressure today from the likes of, you had ITC, HUL, which were pretty much down. And Sun Pharma, as we've already mentioned, was your major loser for the day. Vedanta, UPL, Hindalco, Indiabulls Housing are a couple of your other Nifty constituents which saw good amount of cuts. But oil marketing companies were pretty much strong if I compare it to the other pack. BPCL was your top gainer on Nifty with gains of 3%. Second half of the session, Asian Paints saw a bit of buying coming about. So Asian Paints also gained almost 2.5%. And you had stocks like Tech Mahindra, tire stocks on back of crashing in rubber prices seen in China. That augured well for a couple of your tire stocks, Neeraj.
Yeah, so I don't know if it's got to do with crude that Asian Paints did in the second half of trade, but certainly it was crude which led to the buying in OMCs. I mean, you would attribute crude to be the big factor why that happened, but add to that the fact that the Bharat 22 ETF got some subscription, plus the 100-day moving average factor that I was talking about, and the OMCs did bounce back. At least HPCL and BPCL moved up from that 100-day moving averages. I don't know if now they come off below, and the significance of that Pradeep will be able to best speak about, but there was some bit of buying that we saw in the OMCs in the session today. Pradeep, just wondering, how strong would a protection or cushion level be the 100-day moving average for an oil marketing company, I mean, or for that matter, any stock?
So not so much. I mean, 50-day and 200-day are probably more important levels, but there would be more, other significant indicators that you'll be watching.
The fundamental one.
After a significant correction, even technically, I would say. So a reversal is always possible, and there is a kind of relationship, inverse relationship between the OMCs and the way oil price moves. But it was in today's trade. What was interesting that while technical levels were holding for the index, at least the Nifty and Bank Nifty, if you look at some of the most beaten down stocks, say ADAG Pack or GMR Infra and other stocks like that, they didn't really see any significant bounce, even a significant bounce from lower levels. I mean, after falling for 10%, the stock should bounce at least 3-4% to be called a decent bounce. So whether those supports are still found or no, whether that supply, for whatever reason it came today, in so many high beta stocks, has that been over or not? That's a big question I think that traders will be grappling with.
I think it's a difficult one to answer though. Add to that the fact that the Dow futures, as they stand right now, are indicating a start which is softer than the close that we've had yesterday. So suffice to say that there could be some more pressure in our markets in tomorrow's session. That doesn't augur too well. So that is one. And two, typically, as Navneet says, the Bank Nifty weekly expiry does tend to get in heightened trading activity and unusual reactions at times in the entire banking space and Nifty Bank as well. So that could be interesting too.
Sure, and I think it's a little bit of global factor also that, you know, the sell-off which one saw in India, the European markets have been trading in the red. You guys have been pinpointing the Dow futures which are showing a cut of almost 100 points. So let's see the handover, how that augurs for our trading session tomorrow, how the Asian markets open tomorrow. But clearly right now, FTSE, CAC, DAX, look at that. There have been sharper cuts which one has not seen at least in the past few sessions. DAX is down almost 124 points, and look at that, the closing for Asian markets were also in the red. Nikkei down 1.5%, Hang Seng down almost 1%, and Shanghai also closed with cuts of 0.8%. Clearly the data which came out of the Chinese market actually did not go down well across the globe, I'll say, and that's the reaction we saw back home as well for the commodity related stocks from the likes of Graphite, HEG, Rain Industries. These were the stocks which were going up because of the demand supply gap, but as the electrode prices crashed in the Chinese market, you saw these stocks also coming under pressure, and no major cues in terms of positive cues, I'll rather call it, from the futures and options market. Also the put writers have been running for their cover. The 10,300 strike saw a lot of unwinding, whereas the 10,200 call strike added huge amount of open interest. Addition was seen, almost over 20 lakh shares were traded. So clearly, Pradeep, you're better at this. If I look at the charts, what's the range? Because if I look at the premium on the 10,200 call and put strike, the range which I'm getting is between the 10,080 mark to almost to upside of 10,285.
Also, what is interesting, I mean, till the last time I checked it, you know, the 10,200 writers were not really panicking.
Right.
You know, the kind of unwinding that you usually see when an index decisively breaches, and decisively, I mean to say by 80, 82 points breaches that level. So that was not seen. I think we'll get to know when we get the end of the day figures here, but I don't know how they might have been hedging themselves.
The 10,300 put strike there, the put writers came in for a cover, but as you rightly mentioned, the 10,200 put strike did see a bit of open interest addition. So let's see if we can end the series above that mark. That remains to be seen. But for the day, the cues, if you go by it, and towards the end, by the way, let's just pull up India VIX that ended the day in positive. So third straight day of closing coming above that mark of 14, which is not a great sign, Pradeep.
But if you look at it over last few weeks now, India VIX has come above 14 and a half kind of levels were seen sometimes intraday, and then it kind of recovers. So probably the range is changing. For a long time we saw that India VIX moving between 10 and 12. Now probably it has shifted to a higher range between 12 and 14 or 14 and a half is the kind of a new range that we see, and this has happened after a long time. I think first time in probably this year, you know, it's showing a sign of bottoming out. So far the average VIX levels kept falling every expiry, if you look at it, you know, series after series. This for the first time in November series that we see the VIX will probably end with a higher average level compared to the previous expiry, maybe previous 2 or 3 series actually.
Okay, so that's the lowdown on what the markets have done and what they could do over the course of the next few sessions. But I think there are a clutch of names and clutch of sectors that we should talk about as well that deserve a mention. One is, of course, the tire names and the way they have done. So that is one pocket. I think it's very, very interesting what's happened to some of the frozen food companies as well and shrimp companies which are in focus, because they've come out with fairly decent numbers and fairly decent reactions as well. In fact, if I'm not wrong, Apex Frozen Foods and Waterbase reported their September quarter earnings post-market hours yesterday. Both the counters have seen strong gains. Sumit Sarkar is here with a quick lowdown of what's fueling the rally. Sumit?
So Apex Frozen Food and Waterbase came out with the second quarter earnings. Now, both are related to shrimp activity. Both companies are related to shrimp activities, but Apex is completely an exporter and Waterbase is into export, but is also into shrimp feed. Now, first let's see what Waterbase did. So Waterbase revenue was up by 21% to 97 crore in the second quarter. EBITDA was 3 times up by 15 crore. While margins jumped by 910 basis points to 15.6%, and net profit rose by around 265% to 9.5 crore in the second quarter of financial year 2018. So what led to this boost? Lower raw material cost and lower finance cost. So raw material cost for the second quarter was around 22% of the revenue, and while in the corresponding quarter last year it was around 67% of the revenue. So the raw material cost in this quarter was very low. Also, the finance cost for the company dropped by around 97%. So these were the two reasons which led to the boost in EBITDA and to the bottom line. Now let's see what Apex has done. Now Apex gave out the second quarter numbers, but there were no comparables. But what stood out in those numbers was this. For the first half of financial year 2018, the revenue for Apex was close to 533 crore rupees. That is what 77% of the revenue that it did in the financial year 2017. If you see the EBITDA,
I'm so sorry. Hi. Hang on there.
Yeah.
Hi.
मेरे को भी news पढ़ने का है.
Hey, but you are a RJ, right? This is a TV studio.
Are you in the right?
पर मैं भी कर सकती है.
नहीं कर सकती है.
नहीं कर सकती है ना. आप चांस दो ना, मैं करके दिखाती है.
नहीं सॉरी, ऐसा नहीं चलता ना. हमारा लाइव ऑडियंस है, उसके सामने.
नहीं तो लाइव डेड सब ऑडियंस के लिए मैं पढ़ती है.
बट ये तो इंग्लिश है. आप हिंदी बोलता है, हिंदी नहीं चलता है.
I talk very
और इंग्लिश
good English.
ये मार्केट का चैनल है. यहाँ पे लोग स्टॉक मार्केट.
पर आप भी वहाँ से पढ़ते हैं ना. मैं पढ़ के बताती हूँ ना.
चलिए बैठिए, पढ़ के दिखाइए.
All the best, I might add.
Sorry, Somit, to interrupt you.
Okay, so give it a shot.
Hi everyone. It's been 3 days in the red for the Indian markets. The benchmark Nifty ended the session down 0.7%, and that's not as surprising as me anchoring this show. The global weakness in commodities filtered through to India as well, and losses today were led by metal stocks. Oil marketing companies gained today. But they're going to have to ask a tough question these next 4 months. The government has asked them to make cleaner fuel available 2 years earlier than was planned. But it's for a good cause. Let's hope Delhiites will be able to breathe easy from April next year. Talking of breathing easy, tire makers are a happy lot today. Rubber prices falling means more bang for the buck. And when it comes to money, Indians are getting wealthier. The country grew richer faster than China. But that's only half of the story. An average Chinese adult has 4 times more than the average Indian.
Not bad.
Not bad at all.
You're giving us competition for our jobs. But hey, are you seriously Vidya Balan? Are you seriously Sulu?
These two wouldn't know right away.
Were you surprised?
No, if you are, then you would know the name of our favorite restaurant where we go for dinner.
Table.
Okay, yeah, she got it right.
Yeah, I told you. So, no, it's just thank you for allowing me to butt in.
No, not at all. You're doing a good job.
You know, I was so nervous because I was like, I don't understand business and I've never done this, but this was easy. So to whoever wrote that out, thank you very much.
No, but so okay. So now tell us. I mean, because you doing a movie, an act, which is in a manner of speaking similar.
Yeah.
It does involve speaking to the public.
Yeah, yeah.
That's not, if we are understanding it
Which
correct.
comes to me very easily. I can speak 19 to the dozen and not get tired. You know, I just talk a lot.
So you are an experienced RJ actually, you know, from Lage Raho to Sulu now.
Yeah.
But how come you shifted from morning show to the evening or late night show?
I grew up. No, actually, you know, I have a sleep problem, so I don't want people to sleep ever. So with the morning show, I'd wake them up from their sleep. With a night show, the promise is I won't let you sleep.
You know, clearly, these both have done their in-depth research.
I haven't.
I don't know
Tell
anything.
Pradeep that, hey, you've actually researched the whole bit from a morning.
I still remember that Good Morning Mumbai.
Yeah.
I seriously want to know, how do you open that late evening or late night show as an RJ?
So it goes like this. I say, hello, आपकी रातों को जगाने, आपके सपनों को सजाने, मैं सुलू. दिल के बटन से फ़ोन लगाइए और मेरे से बात कीजिए. और ज़रूरी बात, टिकट खरीद के 17 नवंबर को मेरी पिक्चर देखने आइए थिएटर्स में.
I don't know if he's your fan or not. He's not going to go to the theater because he's hooked to Netflix these days.
No,
but you have to tell
No,
me.
actually, so am I. So am I. But I have a proposition for you. Let's meet for dinner at the table and then go into the theater and watch Tumhari Sulu.
Sounds like a plan.
Yeah.
Getting hooked to Netflix can actually get you some brownie points as well. But hey, I have a small challenge.
Yeah.
Since you mentioned when you sat at the table that this was rather easy, I have a slightly difficult challenge for you.
Okay.
Since you said that while you don't know too much about business, but you've grown to this job as well, what we have on the screen out there is the Nifty heat map.
Oh.
Let's try and go through that map and let's
Okay.
see you anchor from this wall.
So you do it for me and I'll follow you, I promise.
Okay.
You just do, so BPCL is that how I do it?
Yeah, no, okay, let's try and give it a shot.
Yeah.
What anchors, television anchors, business news anchors typically do is say that, hey, this is how the market has closed. BPCL, Asian Paints are amongst the top gainers, and Vedanta and Sun Pharma are amongst the top losers, but a lot of red on the screen, not enough green on the screen. Let's try and see you do that.
I repeat that?
No, you don't have to go verbatim. Just give it a shot.
Okay, so this is how the market closed today.
Very good.
BPCL and Asian Paints
have closed in the positive.
Whereas Vedanta and
Hindalco
have
closed in the negative.
Have closed in the negative, unfortunately, but there's a lot
of red
and very little of green.
So the markets have disappointed today. But Tumhari Sulu will not disappoint.
Yay! I like you!
Thank you so much for
Thank you. That's on Friday, 17th November.
Friday, 17th
Yeah,
November.
absolutely.
I don't know about the others, but I'm sure a lot of viewers who are viewing in will be very happy to come in. But trust me, Vidya, our newsroom, a bunch of guys are going to go to the theaters and see the movie.
Great, thank you so much. I've enjoyed myself doing this. I can't believe I actually barged in. I was like, oh my God, am I really going to barge in? But thank you for allowing me this. And
Why don't you sign off the show for us, Vidya?
So how
We're just wrapping up this show. So why don't you thank our viewers for tuning into the show today?
Yeah, so
Go ahead.
Thank you all for tuning in today, and thank you all for putting up with my madness. But like I said, I need to thank this team for allowing me in and for letting me read you these stats. I still think we need to have a lot to discuss about the ones in the red, but that we'll do tomorrow.
And thanks for tuning in to Bloomberg, viewers.
Thanks for tuning into Bloomberg. Bye. Thank you.
Yeah, thanks so much.
Thank you. This is crazy.
Wow, that was something. Pradeep, why are you getting up? The show is still on.
We're not done, Pradeep. I think he was going to go and meet
Vidya. Pradeep was wondering how did Neeraj get the dinner date and I did not.
You owe that to me, by the way.
Yeah, you're going to fib about it a bit. No, Yatin, you can't come in. The show is on air. I know everybody's excited with Dhawalan being in the studio, but that's not all. But anyways, having said that, I think it was...
did you see Yatin tapping his feet there and saying, she's there?
No, I didn't quite catch that. No,
I did see. I think a lot of boys in the studio were tapping their feet today.
Well, yeah. Well, that's interesting. Anyways, as we come into the fag end of this show as well, and we've gotten a new anchor as well on the show, let's just wrap up this show by telling you how the markets have closed for the day. 0.5% lower for the Sensex, about 68 odd points for the Nifty as well. The Bank Nifty is held out, but keep in mind tomorrow may be a different day, or tomorrow will be a different day, of course, but might be a completely different day for the Nifty Bank because is the Bank Nifty expiry. But with that, it's a wrap on this leg of Countdown from Navneet, Pradeep and me, Neeraj. Thanks so much for watching.